I know that I guess as a payday lending operation, have been under a lot of scrutiny, and you see legislatures looking at new laws all along. What's the future? I mean, are they going to be able to run you out of business completely, or what?
Well, we certainly hope not. I think one of the things that this credit environment has done, which is good, is it's put our product in the context of other credit available. For the first time, we are being evaluated both in absolute terms, that is to say the cost, simple cost of a product, as well as relative terms against the things against which we compete. Overdraft privilege or bounce protection products that over 80% of the banks use today. Other types of short-term credit that is available. And when you evaluate what we do in the context of those other products and services, we come out very well. Where we don't come out well is when somebody just looks at our product and says, you know what, anything that has a 391% APR has got to be bad. We're not going to look at why that number is what it is. We're not going to look at what the other alternatives are. But our consumers, 92% are high school graduates or better. They're working middle-class families. These are folks who understand what their alternatives are. They make a choice to use this product based on its economic benefit to that family. If it were not so, they would not use it. They could continue to do what they used to do. And in fact, in North Carolina and Oregon, two states that we have had to exit over the last 4 or 5 years, NSF fees have gone up demonstrably since we left. And in markets that we go into, we're able to talk to other lenders. The NSF fees go down that banks have typically charged because we take that business from them.
You know, that's interesting, Billy. So, you know, I've heard the theme here a couple times. Do you think as the dialogue about payday lenders increases, or at least the pushback from the payday lender and the dialogue between state lawmakers, do you think there'll start to be more of a scrutinization about some of these fees within the larger banks and the credit unions, for that matter?
Well, I certainly think the credit environment would lead you to that conclusion. I mean, in the United States Congress right now, credit card fees are under very close scrutiny, and other credit card practices. NSF, ODP short for overdraft privilege, or bounce protection, which is how most people know it, insufficient funds fees are all getting increased scrutiny. But another very important point about that, Chris, and as a banker, you would recognize that but as leverage ratios have gone down, the lending side of financial institutions' balance sheets is becoming less important to the overall profitability. It's much more difficult in this environment to make money lending at the rates that banks can now charge. The fee income side of the P&L and the balance sheet is becoming much more important. And if you look, the relative percentage of NSF fees to total fees in most financial institutions is well over 50%. So, you know, it is a more complicated analysis than the simple moral judgment that some people would like to make. You know, anything that has an APR of this size must be bad. It's vastly more complicated than that. And in this credit environment, policymakers are starting to take a closer look, and we think that's a good thing. I mean, we will argue the facts any day.
Pat? There's a group in Washington, of course, called the Center for Responsible Lending.
We know them well.
I'm sure you know them well. And I wonder, as a company and as a public company, how you address their suggestion that the model of payday lending in general tends to create a debt trap, I think the words they use. And how do you talk about that and answer that suggestion?
You know, we've learned a lot from our critics over the years. In the earliest days of this product, there were some things that were frankly that were wrong with it that we didn't know about. I mean, this basically didn't exist when we got started. So it becomes more popular and you learn a lot. And the debt trap, the cycle of debt, as it's often called, is something we've also learned a lot about. And I think legislatures are increasingly addressing that as follows. I know the South Carolina legislature is looking at this right now. And that is to legislate what what is basically the equivalent of a unilateral right of modification. So that if a customer cannot pay this back for any reason, at their judgment, they come in and they say, look, I'm having a hard time, I can't pay it back, and they automatically get an extended right of repayment, often as long as 4 months. So you take a $300 obligation, which would be due in 2 weeks, and make it due over a period of 100 to 180 days. So instead of paying $300 in 2 weeks, you're paying about $30 or $40 every pay period for a longer period of time. That allows people to manage their debt in a way that works for them. They get to decide if it's too much, and they can do it on their very first payday advance, their 5th, or their 10th. So it really puts in the hands of the consumer a mechanism to get out of the cycle of debt.
I wish we had more time to talk about that, and you can get a chance to talk about the possible nationalization of the banks. But, Billy, thanks for being on the program. Good to have you.
Pleasure to be here. Thank you, Chris.
Yeah, absolutely.